what you know about the Fed. So let's just have some bullet things. Any random comments, no wrong answers. Whether it's conspiracy theory or whether it's real theory or whether it's just something that you read or your impressions that you had growing up of what is this central bank, what is the Fed. Some of you have had the macro stuff, but I'm not expecting to spew off technicalities.
They control the production of money.
What's that?
They control the production of money.
Control the production of money. Okay, what else? I kind of like that, the production of money, yes.
It's like the bank's bank.
Okay, good. The bank's bank. Rachel? Okay. Authority. Yeah, it's been a topic in the news. Authority to bail out, to intervene. They have discretion to bail out in the financial crisis.
And also have authority to make somebody fail.
Okay. Yeah, sometimes people have questioned this of picking favorites. Authority to allow failure, which they probably don't want to wield that too directly, but they certainly have over time. Yeah, that having this discretion of who gets bailed out and who doesn't.
Monitor interests or not interest motivation.
Okay. Monitor. I think we could just go ahead and put both those if you want. Okay. Any other comments? Destroy money. Is that what you said?
Yeah.
Destroy money. This is a brainstorming session, so I'm not going to shoot down anything you guys say. So.
Are we going to Fed?
I was going to bring that up. Yes, I would like to. Okay, destroy money. Other comments?
It's a pseudo-government.
Pseudo. I don't know if I can spell that. Is that right?
I think so.
All right.
So there are 7 governors.
7 governors. Okay. Anything else? All right, so I'm going to do a little handout here and start off with a little bit of the history. And so just this is straight from your text. The text has a number of these little bubble boxes that are kind of these extra insights. So I thought these would lead to some discussion. So, takeaways from that little blurb.
They decided to make 12 to spread it out, so each section had a say.
Yeah. So let's talk about that. Where did that come from?
The idea that one bank would not be popular with the public because
Yeah.
it's located
And where did that come from?
Failure of, what was it, 3 or 4 separate national banks.
Yep, they had that. Some failure of previous banks. It says the history of the United States, that first sentence. What is our history?
We don't like centralized.
Yeah, we're not too big on the centralized power thing, right? So when it's kind of an interesting backdrop of how our system got set up, that our founders didn't like to see concentration in the White House either, right? In terms of the setup of, go back to the Constitution and all the founders of the United States. And so this is right in line with that. And that's an insight that I didn't always think about of the history. I think I've become more and more interested in history as I've gotten older. I just kind of wanted the facts back then, but it's to see the evolution of how this came about is kind of interesting. So what are the 12 banks? Let's go down and pick one off. Riley, we'll go right down the line. I just want to kind of go through every of the 12. San Fran. Dallas. Minneapolis. Gene. Chicago. Jorge. Dallas. Michael. Atlanta. Corbin.
Richmond.
Richmond. Michael.
KC.
KC. Can't forget KC. Philip. Rachel.
St. Louis.
St. Louis. Sawyer.
Cleveland.
Cleveland. Colby. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and you get number 12, Colby. I think I know which one it is. I was kind of losing track myself.
New York.
Yeah, New York, the big one, right? A key one, as we'll learn about, is New York. Now, what do you see about the composition of those banks as you look across the map?
They're much more concentrated to the East Coast.
To the east, yeah. And why do you think that would have been?
In 1913, the population was much more central
Yeah.
to the East Coast.
And certainly a lot of the activity, banking and industry and financial services and stuff, really, originated in that Philadelphia, right, where things started in New York and whatnot. So we see a large concentration there. Certainly there's a large concentration of people in a place like New York City and Manhattan area as well. But that kind of pales in comparison now to like District 12. So which one's District 12? All right. That west chunk, look at the states that those take up.
And Hawaii.
And Alaska and Hawaii. Yeah, Alaska. How many people we got in Alaska though? We don't have too, as far as people go. Somebody was from Alaska. Must not be somebody from this class. Somebody from a different class. Somebody here at OU was from.
Freshman basketball girl.
Yeah. It's a girl. Yeah, it's a freshman basketball. So they actually pay you to live there. That's kind of a nice thing if you can tolerate the cold. But I thought she said 500,000. Anyway, the population's pretty small, mostly concentrated in Anchorage and Juniper or whatever. I think she was from one of those. Juneau. Juniper. What's Juniper? Is that anything? That's something, isn't it?
It's a bush.
Well, that's true. It is a bush. It's what? Okay. It very well might just be the bush I'm thinking of. So. All right. So what are these other dots on here? What's the black dots within the region 12?
Branch cities.
So branches, and what do you notice about that compared to these other districts that are smaller on the East Coast? The number of those black dots are less. So that's part of how they handled the volume as they went, is creating these extra ones. So even though there's technically just one Federal Reserve Bank there, there's quite a bit of coverage, or more coverage through these branch cities. So it's a little more to manage that way, but whereas like District 9 covers a lot, the Minneapolis area, but we just got that one in Montana, and there's a whole lot of freeway, I can tell you. I'm from Minneapolis originally, going across Dakota all the way to Helena, Montana. So you can kind of composition of this that way. So where are the governors, the Board of Governors, the 7 that Rachel brought up, where are they located? Washington, D.C. So that is, kind of the main hub. And then we'll kind of learn through this chapter on how these are related from there. Why do you think it was important then to have them spread out? So it sounded like it was political, for one thing, to help get it by the American public. But what else? What else does that give us? Do you think it was effective, I guess, is one way to look at it, too. And is it as effective today as it was back in 1913?
One of the big things that it did was it provided consistency in currency, and it also gave, with it being more decentralized, it encouraged people more to actually use the banks rather than the mattress pad.
Okay. Yeah, so you got a couple things there. So as far as the currency goes, yes, it blanketed the currency, but then the distribution of that, having something in closer proximity, I think helped in those days. What else would that closer proximity do? Having the San Fran or Kansas City, Minneapolis, Dallas. And does it matter as much today as it did in 1913?
No, because communication-wise, it would have taken so long to communicate with the East Coast from San Francisco or Minneapolis or wherever, Dallas now.
Yeah, I mean that certainly is a major factor, just the communication process. We know that technology has come a long ways. Do you think people still feel the same way, though, that they like, are there benefits to having the branches? Or does the World Wide Web provide enough coverage and enough communication mechanisms that maybe we should just throw this in the garbage can? Be a lot easier. We just had it focused in Washington, D.C. Okay, and who's the we in what you're thinking? I agree. the we have? You said we have to have somebody to communicate with. What we are we talking about? Anybody can jump in. I think that's a good comment.
The general public.
Okay, so yeah, it can be just the general public, just the general average Joe. And who else?
Banks.
Banks. Yeah, so we got lots of banks. How many banks did we have in the United States? Anybody remember?
A lot.
At one point it was 14,000, but it's dropped over time, we learned.
6,000.
Yeah, around 6,000. I think it's 6,500, I thought. I'm not even positive, but yeah. Somewhere around that type of range. And so they have specific issues going on that they might need a little face-to-face communication. And granted, we have jets that can get us from one place to the other across the United States in 3 hours, but that might not be as convenient as knowing somebody's there. So what other reason might there be to have somebody with close proximity to the activity, to the banks or the businesses, by the way? The banks, that would be the businesses that are borrowing from those banks, and we've got, as you already said, customers of the banks. What else comes from close proximity?
Easy management.
Okay. And management of what type of stuff?
It's easy for the Fed to manage the banks as far as make sure they're following the regulations and doing things the proper way.
Yeah, I think there's real details to get into to kind of get your hands dirty. There's a lot of information that one particular bank might have, and so that can have some advantages. And is it a once a year type check, or do you think it'd be better to be a little more frequent with that? Yes, Rachel?
You were talking about how the Fed, they build personal relationships with
Yeah.
other people in the bank, so I'm sure they're probably taking, the execs from Goldman Sachs out to lunch, or,
Mhm.
they're, actually meeting face to face. That has some value.
Right. Why would the Fed want to have one of their presidents, like in San Francisco, in Kansas City, in Dallas? Why would that be important, again, having that proximity to those? What are some advantages to that?
Like know the district needs.
Yeah, you can. So does that bank president actually live in San Francisco, do you think?
Yes.
Yeah, they likely do. They actually live right near their work. And granted, some of them might live an hour away, just like we always do. But they literally, their household is there. So they really have a better grasp of what's going on in a different way that you can't from an office building in Washington, D.C., right? If you're not if you're not actually immersed into that culture, into that economy. And granted, that's a little bit further of a stretch for the San Francisco president, but we've got these other branch offices where there's a director of that branch that is living there and can really report back. Part of what these districts do, they're one of the leading employees of economists. And so they are doing research and trying to report to the Fed, ultimately reaching all the way up to Washington, D.C., to the 7 Reserve Board governors. They're trying to gather data locally on each one of these areas of the United States, because each sector could be potentially important to the overall administration of monetary policy. So having placement of that building and the physical proximity of where things are and the ability of businesses to come and approach them or other people is pretty important to the overall structure. Okay, so other comments, questions there? Now, some people turn that over and say, well, is it really decentralized, or is this just kind of a facade? Was it more political at the time to have these banks spread out? And when it all boils down, we've got one person in Washington, Janet Yellen now, the chairman of the Fed, is really pulling the strings. You know, is it effective in getting that information? And that's part of what we'll explore. But at least we have these communication channels and possibly paper trails. If you send an email to your board president about maybe something that was going on, did that get passed through the channels? There's a shroud of secrecy about the Federal Reserve, but ultimately, I think generally after a 5-year period, they have kind of open books on what they've done, what's been put in writing. So eventually they get to the point of being transparent, but they like to keep a few secrets as they're administering policy. Okay. Any last comments, questions on the handout or the history? All right, so let's talk a little bit more about the guts. Let's first put up here the functions. Yes, chapter 16. So one thing is they clear checks. What does it mean to clear a check? I'm wondering if my check cleared.
They're making sure that the person has enough in their account to cover the balance of the check.
Okay, so they're actually handling the details of that check. So when you write a check on your people's bank account, and I write one out to Rachel, and she ultimately takes the check and brings it to Wells Fargo, you know, how does that get dealt with? You know, who makes sure that I wrote a check out to Rachel for $100, that it leaves my bank account and goes into Rachel's? That is one of the functions of the Fed. So they are the check clearinghouse to make sure that the accounting of that. So it's really a big accounting function. Accounting of deposits and withdrawals into bank accounts. So this was true right away, that this was one of the functions of the Fed, one of the early reasons we had them, to make sure we had somebody that was kind of, in theory, an independent third party that was handling those transactions between the two. Do you think that function has changed over time? How has that one maybe evolved? I know it's hard to put ourselves back into 1913 or 1933, but what are some things that have changed over time?
Are you talking about like wires, ACH?
Yeah, there's been innovation of new technologies. Okay. Computers weren't around back in 1913. We didn't have basically a calculator back then. I can't remember when the first adding machines were actually invented. I think it was in the 30s by IBM, was the first one to kind of get the basic calculator, electronic calculator.
I know, like now the checks they go into a computer system. Back then there was no computers.
Yeah, it was all physically handling the checks, right? And there was, again, without computers, I don't know if they had a typed up logbook of debits and credits. Some of these guys, Riley's an accounting guy, right, of actually keeping track of the physical piece of paper as it passed around. And so, and nowadays we can take a picture of it with our smartphone, and the physical piece of paper doesn't even have to pass through. So how many of you guys have been doing that? Have you been depositing checks with, yeah. I still have some of my business accounts up in Iowa, and I didn't even realize this as part of the rules, but I couldn't put my checks that I had a few tenants sending me, it's not too big a deal, just a couple checks a month, but it was enough to be a pain in the butt. I couldn't go to the ATM in Kansas unless the bank has a charter in the state. You can't use the ATM. So that sucked. I had to endorse the check and send it off by mail, and then there's always the fear that it might get lost in the mail, and so then when the banking thing just evolved in the last year for the most part, maybe 2 years, but that was awesome. I could just take a picture. I didn't have to spend 49 cents on a stamp or anything, right? Just snap the picture, snap the back, and send it off. And then I still have the paper copy of the check. So I did learn, because I was curious if they had just a computer that did everything. A real person at my bank took the pictures, took the images, and treated it as if they got the piece of paper, just like when we go to the bank for normal. So that's currently the system. Again, that will probably evolve to maybe a machine will do it down the road, but a human being at my bank where I have my account takes in the image, looks at it, and does their entries just like as if the check had come through. And then I hold on to the check in case there's a problem down the road or whatever, but eventually I can just destroy them. So that's an interesting function that's evolved. And once they got that figured out after 1913, is this a function, this accounting function, something that other places could do? I mean, if we really come down to the accounting of it, is that something that other companies even could do? Sure, there's lots of accounting. Now, when it was started in 1913, you got to think about everything being new, the currency, the banking system. It's like we want to make sure that everything's being done properly, and so the Federal Reserve will be in charge of the accounting. As we got used to the system and as the system grew, they started to realize, for one thing, as the population grew, especially California over here, the volume of checks that the Fed had to process, the physical paper coming through was so high that they honestly couldn't handle it much anymore. And so they started to subcontract to private companies that were check clearing houses. So this was a for-profit company that the Fed hired to handle that accounting process, the check clearing. And it really was just data entry, making sure, and then the Fed, of course, had to monitor what they did, but they hired for-profit private firms to handle the check clearing. And I'm sure there's one in Kansas City. There was even one in Des Moines. I think they're scattered in multiple places around the country. And so that accounting function got out of their hands as they grew. Okay, questions or comments on that? All right, number 2. Issues new currency. Now, if you guys got some dollar bills, why don't you pull them out? Let's see who's got the ugliest piece of currency in their wallet. Pick out the one that's the rattiest. Let's see who's got, or that's been marked up. I don't want you to mark it up, but you can. Maybe some of you don't even carry 1 ounce of cash. That's probably my worst bill right here. Who's got the worst bill in the house?
Oh, I got a little dough.
Got a little ink mark there. Yeah, that was not too bad. We're doing a little auditing of. They're kind of similar to mine, yeah. These are starting to get. Anybody got some torn bills? You got a torn one? No. You don't get any extra credit, so you don't have to rip it yourself. But yeah, she's got. Oh, and right, yeah, I'd say Sawyer's probably got the lead.
All right, get all your money.
Somebody was trying
I think
to.
she got me. Anybody got something worse than that? She's got some writing on it and a little tear in the middle.
Just so you know, he was taking it as the Fed, but he doesn't have the money.
Yes,
to
this is how the Fed withdraws currency from the system, and I'm the Fed, you guys are the general public.
So now he's lowering.
Now I collect all you guys' dollars I want, right?
All right, so that is our system of looking for currency. So that's going to be number 3, but they issue new currency. So this particular function is not changing the money supply. So that's not what we're talking about here, where we're actually increasing the supply of bills, but rather doing this replacement function. So that when the ratty bills, I think they have a computer scanner. I think the banks do a little bit of this. I don't know, Michael, you might know this. Do the banks actually collect kind of crappy looking money too, that they set aside to give to them?
Yeah, so
I thought they did.
that's pretty much what happened as we kind of went.
Do you guys keep a special, does the bank keep like I thought the banks keep a special little, who else worked in a bank?
Well, no, I haven't worked, but I know I took in like a cut in half, like $5 bill up there, and they gave me a new one.
Oh, and they did,
So,
okay.
Yeah, I don't know if they kept it in a little box. Or
Right,
what.
I think that's what they do, is if they see really bad looking currency, they'll set it aside, and then of course the Fed gives them money back for it. But part of what they do is funnel out the bad bills.
Chris was the one that would know more.
That's what we did.
Oh, is that right? So
Yeah.
where did you keep it?
In our safe.
In a
At
special
the end-
little.
At the end of every teller shift, they had bad bills, what they had.
Oh.
Take it in there.
And put it in just a special little drawer that you'd hold them for a month?
At the end of the month, when they brought in new money, they would take the old money.
Okay, cool. All right, so that is getting the new bills into the system, so eventually we're funneling that out. Judging by what we had, just this little survey of the room, is the Fed doing a pretty good job of that? Seems like they do. I mean, the currency is pretty good. This is one of the most wasteful things that the Fed does too, because what would be an alternative to this dollar bill? Gold, maybe. An easier, just a coin. Yeah. So a lot of countries save a lot of money by just going to a coin, and we've tried that in the United States to do the dollar coin, and it just doesn't seem to stick. Like people like their money. It almost has to be done by force. Like just start pulling these bills out of circulation. But if we went to coin, I don't know what the estimate is, but there's millions of dollars that could be saved by the government by just pulling dollars out. Yeah, doing away with the penny is another one. Yeah.
I'd say the main reason they don't do that is because the convenience factor of holding paper dollar bills. It's
Yeah.
hard to hold $10
Right.
coins in your pocket.
Yeah, you start lugging them around. And I think they're getting a little bit easier to do things with. There's less currency floating around because of debit cards and credit cards and the acceptance of our little iPhone, and we can swipe it through. So all of that changes the dynamic of how we hold currency. All right, so new currency. So it creates currency slash bank notes. But the $1 bills slash, let me just put bills here. I don't know if I'm using any good words here, but creates currency to replace old ones. So again, the function that we're highlighting here is just the running of the printing press, which is pretty cool to look at, and that's what is in Kansas City. So let's have that discussion. How many people would be interested in traveling to the Fed if we set up a little tour date? If you haven't seen it, it's worth seeing. It's pretty cool. And they have just rooms of bills that you can look at, and they give you a little bag of money at the end. Is Wednesday, Tuesday, actually Tuesday, Thursday, what time on Tuesdays and Thursdays? Because I'm pretty flexible Tuesdays and Thursdays. I would probably won't be able to satisfy everybody, but
I've only got one class in the morning on Tuesday.
Yeah, I only have class till one, so.
Tuesday? So Tuesday afternoon?
I have 1:30.
Okay, class at 1 and 2:30. So when I did this before, how long did we take?
It was like half a day.
It ended up being like 3 or 4 hours. Yeah. All right. Let's and I suppose Thursday's about the same if we pick Tuesday or Thursday or Wednesday.
Thursday would probably be a little better.
Which one?
Thursday.
Thursday would be a little better? It doesn't really matter to me.
Yeah, we don't have tax costs on Thursday.
Okay. So let's try to brainstorm here. I have Thursday. I teach, I'm basically done at 9:30, and then I've got some other things that I can just rearrange my schedule for. So if we left at 10, like in the morning, and then got back by 2, do you guys have afternoon classes? 2:30? And you had,
I'm okay missing that.
you're okay missing that. Okay, that's another thing I guess to throw out there. So yeah. But I'd say we could definitely be back by 2:30 if you guys have some 2:30 classes.
Are you guys busy on Saturday or something? But I have
She gets 10
I
o'clock.
have 10 o'clock.
On Thursday?
Me too.
So let's see, 11, 12, 1, 2, well that'd be 3 hours.
We leave at 11. That not be enough time.
How many other people have a 2:30 class?
Tuesdays, not Thursdays.
Not Thursdays. So Thursday sounds like the better one. Well, and here's the thing. I think we could, if you had to leave early from the Fed, we can do most of the tour, and you could probably buzz out of there. You can kind of make your choice because it sounds like you have. So a couple of you have classes from 10 to 11. So if we left at 11.
Yeah.
I think that would probably be the best. It sounds like. Definitely speak up. But I'm thinking, it's basically an hour right on the money to get there. So 11 to 12, we get there by 12. And the tour, you can do an hour, and you can probably get back to your 2:30 class if you needed to, or some of us can stay a little longer. All right. So 11 o'clock. Shoot, should we? I better check they have a scheduler thing, so I will start looking. I was immediately thinking, how about this Thursday? But if I remember right, you got to tell them that you're coming. They have a schedule list if you're bringing a big group of people. And then we get a tour guide with it. So, all right, let me check into that. I'll write that down. And we'll shoot for a Thursday. Okay, good. Let's see. So we talked about replace old ones, damaged ones. All right. Number 3. I kind of covered the damage, removed the damage and the replacing. Make discount loans. So make discount loans to banks in their district. So we got the 6,500 banks scattered around the United States. Within their district, they report to that bank if they're needing a discount loan. We talked about discount stuff back in the early chapters. What was a discount loan? Or why do we call it a discount loan? It has to do with the structure of the payment. That's my short little timeline. Time period 0, time period 1. A discount loan. How does a regular loan work?
Discount loan is when you make a smaller payment and then you pay it all back at once. Is that correct?
No, but you're on the right track. It's set up a little bit differently.
You're looking where you receive less money than what you're actually pay in the very end.
Kind of, yes. Let's go back to traditional loan. We know that one. If I get a $10,000 loan, when do I get the $10,000? At the beginning. And then what do I pay back at the end? The $10,000, whatever the interest rate is, right? So $10,000 times 1 plus I, where now I is the discount rate, the interest rate that the Federal Reserve charges for that money. So 10,000 times 1 plus I is what I pay back after the period's done, and then it's just the interest included on that. So with a discount loan, it's just kind of a weird way to think about it. I'm honestly not even sure why they do it this way, but you're going to get a $10,000 loan. You say, hey, I need $10,000, and today they discount that by the amount of the interest rate. So we're just going to take the $10,000 and divide it by the interest rate. And so now you're going to get $9,000 up front, but you're going to pay back $10,000 later. So again, it's kind of just a structure of it. It makes, at the end of the day, you're doing the same type of thing, but you're paying it this way. I think it has to do with keeping the numbers easier for the amount of payback. For some reason, that must be maybe a little bit easier in the banking world to say $10,000 later, I'll pay you back, and then all of a sudden they cut you this into their account, the discounted sum, and then you pay back $10,000. But I don't have much more on that for you, other than that's the way they've administered that. Probably when maybe it goes back to the technology again. In 1913, if you were, it was just easier for accounting purposes to have this amount when it's finally paid back. I don't know, but that's the way it works. They still do it that way. Okay, and so each one takes care of their own district again. So again, with the proximity part, traditionally, banks did not go to the discount window because it's kind of like going to mom and dad for a loan. What happens when you go to mom and dad for a loan? You're like, I need to borrow $100. Do they just cut you the $100? They start asking questions, yeah. So it was a bit of this parental type feeling of government looking into our business, and so banks would tend not to go to the Fed. During Ben Bernanke's era, just this last change, and I think it might have been led with Alan Greenspan, they started opening up their lending facility. I think we used that facility word before, to make it more welcoming. Oh, it's okay to get a loan from us. Come on in. And so they kind of changed their philosophy on that. We'll talk more about that later. All right, let's call it a day.